What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into harmonic technical analysis, which is a powerful method of technical analysis that uses specific price patterns to predict future market movements. So by identifying these harmonic patterns, we can gain insights into potential price reversals and continuations. We're also going to be covering what to expect in the markets next week, including the FOMC minutes, initial jobless claims, durable good orders, and the highly anticipated earnings report from Nvidia. So first up this week, we do have the Federal Open Market Committee, better known as the FOMC minutes, that are set to be released. This is just a detailed record of the committee's policy setting that took place last meeting. They provide insights into economic conditions that influence the members' votes on interest rates and other policy decisions. So why is this important? As market participants, we are able to scrutinize the minutes for clues about the future direction of monetary policy, including potential changes in interest rates, and understanding the committee's discussions can help anticipate market movements. This week, we have the initial jobless claims. This weekly report measures the number of individuals who filed for unemployment benefits for the first time. It's a leading indicator of labor market health. So why is this good and why is this bad? Well, high jobless claims can indicate a weakening labor market, which may impact consumer spending and overall economic growth. Conversely, a low claim could suggest a strong job market, potentially boosting investor confidence. Later in the week, we will also get the monthly report for the durable good orders, so this helps us track new orders placed with domestic manufacturers for delivery of factory hard goods. It includes items such as machinery, vehicles, and appliances expected to last 3 years or more. So why is this important? Durable good orders are a key indicator of manufacturing activity and business investment, so an increase in orders could suggest economic expansion, while a decrease could signal a slow downturn. Last but not least, the most anticipated earnings release of the quarter, and that's going to be going to Nvidia on Wednesday. So we know Nvidia is a major player in the technology and semiconductor industry. It will be releasing its quarterly earnings report. So this report is going to include information on the company's financial performance, including profits, revenue, and guidance for future quarters. Why is this important? So Nvidia's earnings are highly anticipated due to the company's significant role in the tech industry, particularly in graphics processing units and AI technology. So strong earnings can boost investor confidence in the tech sector, while disappointing results may lead to market volatility. So it's going to be very important to see what those numbers are going to say. So if you like this type of content, please consider giving the video a like, as well as subscribing to the channel and hitting that notification bell so you never miss a future video. Having said that, I also want to preface by saying I'm not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. So first up, we have the SPY here. We're going to be talking about the bearish ABCD pattern on the weekly that was formed here not too long ago. I mentioned in my previous video that the SPY has found support above the 21 EMA on the weekly. We obviously can see that's the case. We had that hammer candle back in April 29th. We had continuation above ABCD there. The target was at 508.29. And last week, SPY went as high as 531.52 before closing the day on Friday at 529.45, which is a first close above hop there for the weekly. So what can we expect here harmonically for SPY if this is going to indicate that that hop level has reached and a potential reversal to the downside is incoming? We obviously have to see signs of that on the lower time frames to signal that a reversal is incoming. So if we're just looking at the weekly here as I bring out the indicators, you can see that the RSI is still not overbought, still has some room to the upside, and you can tell from previous historical data that just because it reaches the overbought conditions does not mean it's going to reverse. You can see here back in January it went all the way up to almost 80 there on the RSI, and that led up to late March. So just because it's overbought or oversold doesn't mean it can't continue on the RSI. So we have to look at clues to see if this is going to be a reversal. And right now on the HSI, especially on this time frame, you are approaching that midline. So it's going to be interesting to see if it's actually going to get rejected. If you get rejected, you might need a candle pattern to form here to indicate that a reversal is incoming. I just don't see it personally here. This is my opinion. So if you reject off the midline, then maybe come back to down test the 508 target there. You could be coming just to create a higher low before finding support and making a higher high. So this is obviously on the weekly, which could take some time to play out. Obviously you have these other targets here, target 1 at 446, but that's too early to call. So we jump over the daily. Mention really quick that the volume also increased from last week to the upside. Still relatively low too, around this range here, but volume did increase. So that could be through a lot of factors. A lot of the things that could have contributed to that volume increase was OPEX and a bunch of the other news that came out during the week. So let's jump over to the daily here for the shark pattern, the bullish shark pattern on the daily. You can see it finally completed the type 1 reaction all the way above target 2. So what can we expect here for SPY on the daily? Still no indication maybe that a reversal, but there are signs there. We had that shooting star on Thursday, and we also had the inverted hammer candle there on Friday with the increase in volume. Like I said, some of that volume could have been contributed to OPEX and all these contracts being closed out or getting rolled over. So we might need another day or two to signal if the potential reversal is incoming to the downside. We have to obviously volume increase and maybe a pattern formation or candlestick formation to tell us that, hey, reversal is incoming. Obviously, given it a day or two here, it's going to approach Nvidia's earnings on Wednesday, and in my opinion, I think that's where it might consolidate until then, until we finally get those numbers from Nvidia. If Nvidia reports good earnings, you might see continuation in the market. If they report bad, then you might see a retracement down here. So for specifically for SPY, I'd be looking at if there's more continuation here to the upside. Next level I have is 538.33 on SPY here. That's taking a fair retracement from the most recent swing high to swing low. If we do reject here, and there is some resistance in Nvidia bad earnings, the next level I'd be looking at here will be a retest of the 90 EMA, roughly where that gap is closed at 524 and change. Below that, then you have target 2, back to retest there where you kind of hovered for 3 days, and then you made that gap up. That's at 521.10. Below that, then you have 516, and then you have all these gaps to the downside here to retest all these levels as well. Obviously, it's still too early to tell. Right now in the RSI, on the daily, like I mentioned, you still have, again, I had that top there, and you might be looking for a double top, or you can continue breaking above it, especially if Nvidia is bullish. So the HSI on the daily here for SPY kind of overbought. We still don't have the HSI arrow to the downside. We need that volume to pick up again to the downside to signal, hey, reversal's incoming. We're not getting that yet. Amplified RSI is still overbought as well. So in my opinion right now, we could just consolidate here. Maybe we do have a gap fill to the downside in the next day or two, and then continue until Nvidia reports those earnings. We actually had not too long ago reports coming out about Iran's president being in a helicopter crash, so that could also send the markets to react positively or negatively depending on see what the situation is there. So we definitely have to keep a close eye to see what the market reacts with that. So having said that, that's all I pretty much have on SPY right now. My opinion is just consolidation until we get those reports from earnings from Nvidia. So definitely keep a close eye on SPY. Jumping over to the triple Qs here. So the triple Qs has this bearish shark pattern on the weekly. As you can tell here, I think it was about 7 or 6 candles where it met resistance here at HOP at 445.47, and obviously after this week it went as high as 454.69 before closing the day on Friday at 451.76. So what can we expect here harmonically for the triple Qs? Something that's very different here for the triple Qs compared to the SPY is that the weekly HSI has actually broken above the midline. So if this decides to go to the upside to reach these overbought conditions, obviously this would push triple Qs to make a higher high and ultimately even new all-time highs. You still have room on the RSI on the weekly to continue pushing up, as well as the amplified RSI. So right now on the weekly, maybe it's showing some strength, obviously an increase in volume, but something that's different where SPY does not clearly show is that the Qs on the 1 day is actually showing some signs of potential reversal is incoming. And why do I say that? Because you had on Thursday, you had that shooting star and then followed what looks like almost a hanging man happen on Friday off of increase in volume. So as I bring up my drawings here, I have a line in the sand here at 450.72 that if it decides to lose that level, you can come back to test the 90 EMA there around 445, where there is a tiny gap there at the entrance of the gap would be at the lows of 446.90, and it would fill the gap there at 446.47 on the daily. Obviously to the downside, you got a lot of more levels to fill. You had that major gap there around 428. Obviously too early to call for those levels. If I go over to the 3-day real quick, there is a harmonic there at HOP where they close above HOP there around above 450. So if it gets rejection there, you'd be looking at targets down the line around 428. Obviously this is on a 3-day chart. It could take some time. So in my opinion right now, unless you lose 450.72, I think you'll be trading above it, maybe consolidating until Nvidia reports those earnings, and then finally making the move either to the upside or to the downside, depending on what those reports say. So if we jump over to the 4-hour real quick on the bat pattern, there is one on the 4-hour. You can see that the hop level, the price action is below hop, and it's approaching my line there at 450.72. The 21 EMA would be around 448. If you lose that, then you could test 443.09. You have target 1 there all the way to 433. Obviously, that's quite a bit of a drop, and that could potentially happen depending on how the market reacts this week. So not really harmonic forming here. Something I didn't cover on the triple Qs or the SPY here really quick. I just want to jump over to SPX. SPX is showing some signs that a potential bat pattern is forming here on the daily here. So you can tell we have some targets here for SPX. I didn't cover this on SPY because we don't have it yet, but I do think the bat will be forming here soon for the SPY and as well as the triple Q. So we're going to definitely have to keep a close eye here, because if we do get a bearish harmonic forming here on the daily, we can see that this is a W formation, and we know that ultimately a W formation tends to be a bearish pattern that could form to the downside, meaning we'd come back below to test some levels. So definitely keep a close eye on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones currently has this ABCD pattern on the weekly. I mentioned in my previous videos that in my opinion, the Dow Jones looked like it was going to continue pushing higher even before the other two indices were signaling that movement. The Dow Jones showed some strength here on the daily a few weeks ago here, so which I took a position out here for the 17s for the $400 strike price. It went as high as 401 for the week, for closing the day on Friday at 399.95, closing above ABCD there at 394.71. So there is possible continuation here for the Dow Jones. Obviously the volume has decreased 2 weeks in a row now, so maybe some signs here of weakness is incoming, or you could just be consolidating between HOP and ABCD there. So that's going to be a $14 difference there, and you could be trading in that range before the next leg up, right? So what can we see here harmonically to the upside? If there's continuation, you can see 408.76, and there's an even higher target on the daily. To the downside, obviously losing 394.71, you have to lose, in my opinion, the 21 EMA there at 383, and then you can see down to these levels here on the 50 EMA SMA between 367 364 to complete that type 1 reaction to 346.33. Obviously breaking above the the HSI midline here, you could see a potential higher high in the future. So obviously we're gonna have to wait for Nvidia earnings, like I've said. To the upside here, I also want to mention that you had that HSI arrow 2 weeks ago. It's just the reason I also went in long 2 weeks out here, and it played out beautifully there. It was a big nice payday there for the Dow Jones, and right now you can see that this HSI that was generated 2 weeks ago still has plenty of room to the upside before these overbought conditions are met. So in my opinion, if we jump over to the daily, which is another reason why I got in based off the black swan pattern, obviously came up here way above PT2 there, or beautiful entry. My entry point I believe was here on Friday is where I got entered, and it just kept going up and up. Right now you did have a shooting star on Thursday off of decrease in volume, and then you kind of had similar volume there on Friday, which looks like it pushed up even higher to close above higher than the previous close. So in my opinion, if the Dow Jones continues to these overbought conditions within the HSI on the weekly, those overbought conditions could be at that price target where the black swan is calling there at PT3 at 412.84. 412.35 here is the Fibonacci retracement, I believe, from this swing high to swing low. Let's just draw this out really quick just to make sure. Yep, right there. So there is a coincidence there that this might actually hit up there potentially. I know that the RSI is kind of overbought, the HSI as well, and as well as the amplified RSI, but we're also not getting volume to the downsides, or high volume at that, to signal a reversal is incoming. So we could be getting that in the next day or two if Nvidia reports bad earnings, but if not, I am seeing that number continue to push higher here for the Dow Jones, specifically to complete the black swan pattern all the way at PT3 at 412.84. If it decides to come back down here, then we'll be looking at some of these levels here. Obviously the 90 EMA at 395, 392.04, and then we could fill all these targets back down all the way to that gap there. So obviously too early to tell. We're gonna have to wait to see what this week brings. So definitely keep a close eye out on the Dow Jones. Jumping over to the Dow Jones here. So the Dow Jones, we're going to be looking at the weekly here real quick, see where we closed off of. So last week we had low volume, and then there was an increase in volume to the upside here for the Dow Jones. It went as high as 209.77. The low was 204.60 before closing the day on Friday at 208.08. So harmonically, we don't have a harmonic pattern here on the weekly. I do have a higher target here around 223 here that down the line maybe IWM continues to go, especially if the market continues to make higher highs. It did cross the HSI midline on the weekly. Plenty of room to the upside before it reaches these overbought conditions within the RSI, HSI, and the amplified RSI. If we go over to the daily real quick, we can see also that volume has started to also increase back up. So a few scenarios could play out here. There could be a situation where this may looks like a cup and handle. You could come back down to retest a 21 EMA, maybe even all the way down here to 201, 202, right where the 50 EMA is at, noted by that blue line there. You would create that cup and handle, and obviously if you find some support above that and that handle plays out, that could be potentially a break above all the way up to these levels or in the 220s, in my opinion. Obviously, too early to tell. We'll have to see what the market's going to bring this upcoming week here. Obviously, the daily is still above the HSI midline, kind of not clear yet whether this wants to continue to the upside or come for a retracement. We did have an indecision candle close above on Friday with increase in volume, so maybe some consolidation can happen. One of the things I want to mention that if this is going to be a potential cup and handle here, right, you want to see the handle be come down here with lower volume, which could indicate consolidation, which could indicate we're waiting for the next move. When you see volume on that handle, let's say the handle plays out, you want to see that with high volume, indicating that potential bullish momentum is coming back towards us to complete that handle. If you see high volume within that handle, then maybe it could show some signs of weakness and we could invalidate that pattern. Obviously, we're still not entering that handle just yet, so we're going to have to wait to see what that brings. Really quick, I just want to hover over the 4 hour because that's where it gives us a shorter time frame here for potential price targets. And the 4 hour has a bearish bat pattern. Obviously, we get generation of the HSI arrow to the upside on Friday. So this means that a potential reversal back up and it's finding support above the 21 EMA there around 207 and change. Should this come back up here where it did meet resistance at 209.70, you break above that, then you have 215.19. Rejection of XA here, you can come back to complete that type 1 reaction at target 1 at 203.01, roughly where the 200 SMA is at. And conversely, that 200 EMA is at that target there at 201.99, 202, which would create that cup and handle, the handle part of the cup and handle on the larger time frame in the daily. So if this is actually going to come down there, you might actually see this cup and handle play out to the upside. Obviously, only time will tell, so definitely keep a close eye on the IWM. Jumping over to XLF here, the financial sector ETF. We're going to be looking at the bearish shark pattern on the weekly here. Similar setup almost to the indices here, except this never actually came down to test the 21 EMA, but it did find support above the 13 EMA, and now it had that HSI arrow last week. When I mentioned last week that the financial sector is starting to look a little scary to the upside again with some strength, exactly played out again. We also had Chase going to make new all-time highs with strength there. I'm going to quickly go over that chart as well because I do think it's important. But right here, XLF, the next level I'd be looking at to the upside on the bearish shark pattern would be the 1.13 of OB here of the shark pattern at 42.92, and then hop there at 44.59. Right now the RSI is completely overbought on the weekly, but this does not mean they cannot continue pushing higher. As you can tell here, the strength the XLF, the financial sector, has had since January. You were trading since January all the way up to early April, where you did finally come down to reset that RSI. So this could continue pushing higher here. The RSI doesn't really matter if it's if there's strength involved in that continued push to the upside. So if we go over to the daily here real quick, the daily is also approaching these overbought conditions. No HSI arrow. We did have an HSI arrow and dot here, but it continued to get invalidated, and it looks like it wants to continue pushing higher. Really quick, just wanted to jump over on Chase. As you can see, Chase with an increase in volume on the daily, completely overbought within all these indicators here. So I am looking at for a retracement. I do believe a retracement will be incoming, but the signs are not there yet. So I'm going to be waiting for confirmation until it shows me that reversal is incoming right now. You do not want to play against this because the volume is starting to increase here on the daily, and we know that Chase is a mover here within the XLF. So if it's showing some strength there, you can see that the bigger banks are starting to push up higher as well. As you can tell on the weekly, this still has more room to the upside if it decides to break that midline and go to these overbought conditions, which would take Chase here to make new all-time highs and higher highs. What these levels are, for me, I drew a line there. Next level, major one would be at 209.09 on Chase, and for XLF here, the next levels to the upside would be $45 for me. That I think it's taking the swing high there, the all-time high, to the swing low. I believe that's around $45. So definitely keep a close eye on the financial sector, as I do think there is some strength coming back up in this sector. Jumping over to XLE here, the energy sector. So the energy sector started to get more volume this week to the upside. It did form that hammer candle there on the weekly, and if this is going to continue making a higher high here, I'm looking at the next target to be at 101.52 and then hop at 108.63, which would send these to all-time highs. So we did get a little bit of retracement, but it's looking like it's starting to pick back up again as the HSI is kind of starting to curl up to the upside. If we go over to the daily, we do have this bearish shark pattern. The bearish shark pattern, as you could tell, was kind of a channel, and is now breaking out of that channel, potentially reclaiming hop there at 94.46 with the potential 921 crossover on increase in volume. So it decides to come back up. I'd be looking around 96, a high there at 99, call it 100, and then 101.52. Should you fail below hop again, then you'd be looking at a terminal bar 92.22, 91.06, and then down the line maybe to see this level here on target one at 85.60. Something to note, I'm looking here at crude oil futures really quick. So obviously crude oil futures here is having a bit of a struggle here below the 200 SMA, kind of maybe looking like it's going to bear flag. It's currently at $79 a barrel, target one at 77, and you got 69.99 here. So this is quite interesting. The reason why I'm talking about crude oil is because you are potentially looking like a head and shoulders here. So finding a little bit of resistance. It's on decreasing volume. I know Exxon and the energy ETF is starting to go up here, but if this starts to go down, maybe we can see some signs of a trap there in the energy sector. So obviously right now the signs are not there yet, if it's a trap or not to the downside, as you can see that the volume started to increase again. So it's quite interesting, especially after the report of the CPI with the energy coming down a little bit. But obviously we're going to have to wait for more data to see if it's actually coming down, or we're just going to continue pushing higher with XLE, or even if the crude oil futures decide to push up as well. So definitely keep a close eye on XLE. Alright, jumping over to Apple here. So a lot of things are going on in the chart here. You had a dragon, a white swan, and a D-crab pattern here, all on the daily. So I'm going to be going over each one here. More specifically, I'm going to be talking about the dragon and the D-crab. So we did generate a D-crab on the daily for Apple here, signaling there that point D was created. That doesn't mean it can't continue pushing higher. Just because the pattern is formed does not mean it's going to continue to the downside or reversal here for this bearish harmonic pattern. You could tell that the hop level there is at 193.99. Just call it 194 before it could actually reverse at the D-crab's highest point there at the 3618. So if this decides to go higher there, then you might reverse at the resistance level where hop is at. If it decides to reverse now, the next level I'd be looking at would be 187.69. Then you complete the type 1 reaction at the target 1 there at 180.77, roughly above the 200 SMA, where it has found support here on Apple. So quickly, I just want to get rid of this real quick. We'll just mention the white swan real quick. So the white swan, as you could tell, this already played out to PT3 and is actually finding support way above these targets. So we'll complete that reaction there. That white swan is already completed, and now we're going to be talking about the dragon. So the dragon is calling for a PT2 there at 196.38 for a retest of over here back in January. So this is the next level I have for the dragon pattern. Something that's interesting here for Apple, even though the RSI is already overbought, the HSI still got a little bit more room to the upside, and that could be at that 196.38. There is a potential golden cross incoming here for Apple on the EMAs. So that could definitely help it to get to those targets if there is more volume to the upside. We had decrease in volume on the daily, but nonetheless that was still push to the upside there. So on the weekly, on the daily, like I've said, you have this bearish C-crab, which would, it wouldn't be that bad to come down and test 180.77 to complete the type 1 reaction at target 1. That would be just a retest of the breakout above the 200 SMA. You could have something healthy, you created a higher high here, you could just make a higher low, find support, build up some volume, and then finally push to these higher targets. If we go to the weekly here, we broke above, Apple broke above the 50 SMA, close here, had an indecision candle, and now it is actually off of similar volume here. So to the upside on the weekly, we revisit the previous dragon pattern, the bearish dragon pattern, calling BC at 194.52, and then 207.09 for a new all-time high. The HSI still looks like it wants to go to these overbought conditions, and that could be anywhere between 194.52 and then that 207 target. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft on the weekly has this bearish shark pattern. Similar situation there with indices, finding support above the 21 EMA. Since mid-April, still kind of relatively low volume, but volume is starting to increase compared to last week's volume. So what can we expect here harmonically for Microsoft? I do have a level there for a new all-time high of 433.87. The HSI kind of below the midline there. Just want to see if it's going to actually reject the midline and come back for a lower low and fail that 21 EMA, where we'll be looking at it to lose 386.73. Then hop where the 50 EMA is at 386.74, terminal at 351, OB at 334, and then to complete the type 1 reaction down the line. Obviously too early to tell. If we go over to the daily we do have a dragon pattern that we had here that was formed back in early April. You came and completed that, and now you're looking for the type 2 return to OPR. So you did generate on Thursday an HSI arrow with that shooting star on the daily, which was on decrease in volume compared to Wednesday's close. And then Friday, you had this hanging man, but off of decrease in volume. So in my opinion, when we're talking about volume to price analysis, this to me looks like a bear trap. Why do I say that? Because the volume is not indicative of the spread of the candle. You had this higher volume there, or a decrease in volume with the higher spread of the candle of overall decrease in, even though it's signaling here the HSI wants to come back down. You still have to see if there's more continuation. If there is going to be more continuation to the downside here, you definitely want to see that volume increase to signal that there is strength to the downside incoming. If not, I do think bulls might step up here and continue to potentially make a higher high here. BC, it's at 429.31, and then OPRs are at 434.42, kind of very close to my line that I've drawn over here. So two scenarios I could see happening here from Microsoft, similar to IWM, is you potentially create a cup and handle here. A cup and handle would be support at the PT1, maybe even the 50 EMA here. You don't want to retrace more than 50% of the cup there, otherwise it gets invalidated. So I believe anywhere between 414 and then 411 could be a good support. If it breaks down below that, then we can see PT2 there all the way down to 398.39. If it finds support and plays that handle, then we're looking at potential new all-time highs for Microsoft. So definitely keep a close eye on Microsoft. Jumping over to Amazon here. So Amazon bearish shark pattern on the weekly. As you could tell, last week we had a bit of resistance there at the terminal bar at 188.77. Now you had the first week with increase in volume to the downside off of the rejection of the terminal bar there, which you can call this an inverted hammer candle. So if there is going to be more volume for Amazon to the downside, the next level I'd be looking at would be the 86 of the pattern here, which is at 175.95. The 21 EMA has held support here for Amazon lately. So if it decides to lose that level, then I do think you might be coming down to target 1 to complete that type 1 reaction down the line at 135.60. So obviously we're going to have to wait and find out. That would take some time for that to play out. If we go over to the daily here, the daily, you are almost at these oversold conditions on Amazon. So this could actually come back down to retest the 50 EMA there around 180 and change. Maybe if it gets very bearish, maybe if it comes and fills this gap down here, roughly around, that gap gets filled at 173.92, which would just create a higher low, potentially find support, and then make an attempt at a higher high. So you could find maybe an HSI arrow to generate any, if it decides to come down to these oversold conditions. It would be anywhere between The 50 EMA, in my opinion, maybe even the entrance of the gap where it fills the gap and then goes. If it decides to lose that level, then obviously it would be coming down to test potential of that gap fill down the line at 160 where the 200 EMA is at. So not too much to say right now on Amazon. Amazon could be just consolidating here, finding a range here, maybe finding support, and then making an attempt at a break of that 188.65 because it did retest new all-time highs, but it's still finding a little bit of resistance here without having to actually break above a strong new all-time high. So definitely keep a close eye on Amazon. Jumping over to Tesla here. So Tesla on the 1 day currently has the black swan pattern that was generated here, and it is finding support here at PT1. On Friday it went as high as 177.46. I mentioned in my previous video, and I think I mentioned to the Discord here, that you are in first impulse wave with the corrective move up here, finding support. I believe it's at the 50% retracement is where you are finding support here. I know there's a lot of things here, a lot of lines, but bear with me. You could tell here, let me just bring this so you guys can see where we found support. Just slightly at the 50% retracement. You came down below it here, but ultimately found support above it. So if this is actually the first impulse wave and the corrective move is at the 50% retracement, you could be coming for a second impulse wave, which would make a higher high. That higher high could be anywhere between, if we take the fib extension tool here real quick, that could be anywhere between 197.78 and all the way up to 227 to make that higher high for that second impulse wave. Obviously time will tell whether this is going to hold, but ultimately what I'm looking here for Tesla is to, if this is going to decide to break above, it needs to hold above PT1, and you can see 198.87 where the 200 EMA is at. Above that would come back up to do a type 2 return to OPR at 215.21, and then maybe you see these other targets there from the previous harmonic there. Volume is starting to increase on Friday from Thursday. They did close above the HSI midline here on the daily, so if there is more continuation, then these are the targets I'd be looking at. If it decides to fill PT1 at 175.92, you could come back down to 161.75, and then ultimately, if this does not hold PT2 for the black swan, the next level I'd be looking at down the line. I'm not saying this is where it would be headed to, but you would have to lose it with volume. An indication there for PT3 at 101.60 would obviously be very heavily news related. I'm not calling for that just yet, but it's interesting that Tesla is finding support here, maybe finally retracing above the 200 where it can obviously go, the 200 EMA where it could obviously go and start to be bullish again on Tesla. On the weekly, if we go over here real quick, we had the bullish Gartley pattern, reclaiming the 9 and finding a little bit of resistance at the 13. So if you're able to reclaim what XA there at 183.81, the next level here weekly would be at 197.90, the 50 EMA would be at 202, and then you could finally see maybe a type 1 reaction to complete it at 225, target 2 at 253. So definitely keep a close eye on Tesla. Jumping over to Google here on the weekly, currently has this ABCD pattern as well as this white swan. Obviously these are bearish harmonic patterns, ultimately meaning that reversal to the downside could have been incoming here, but it's finding some strength with the increase in volume now on the weekly. And for the ABCD pattern, at the completion of the pattern at point D, it had hopped there at 175.37, went as high as 176.27 before closing the day on Friday at 176.09 off of increase in volume on the weekly. The RSI, I believe it's almost these overbought conditions, but still got plenty of room to the upside. As I bring on my drawings here, one of the levels I'd be looking at, this was by taking the fib retracement from the previous all-time high here back in 2022 to the swing low. That is calling a new target at 193.70. Obviously above that, then you have the psychological level at 200, but if this continues, I'd be looking at 193.70. There are other targets here between 175 and 193 in the 180s, but ultimately this is what I'm looking for, more of a retracement back up here. So really quick, if you take the fib retracement here from the previous all-time high to the swing low, that's the 1618 at 183.70. If we go over to the daily here, we had this bullish black swan for Google that obviously it came back here for earnings, above earnings here at PT3, came back down to hop, found support at that gap, and it looked like it was establishing a range here between PT3 and 163, and now it's obviously creating new all-time highs and with volume to support that move. Right now the RSI on the daily is a little bit overbought, but the HSI still got room to the upside as well as the amplified RSI. So those are the levels I'd be looking at here. You could go more shorter time from here within the fib retracement. You could actually take a fib retracement from this level here to a swing low. You can see 178 and then 182. But ultimately, I'm looking here for Google to show signs if this is going to reverse to give us that indication. And right now, Google is not giving you that. So there is strength on this push to continue pushing higher. So in my opinion, for Google here, looks good for more upside here, potentially that 193 target down the line. So definitely keep a close eye on Google. Jumping over to Meta here. So Meta from the 1 day to the 1 week, still no harmonic pattern being formed. So I'm relying on is the Fibonacci retracement levels here, EMAs, candlestick formation, pattern formations to give us an indication of where price action might go. Right now on the weekly, it is finding support above the 21 EMA. Last week it did form an HSI arrow, but that was off of decrease in volume, as you could tell. And just this current week, we did close the week off of an indecision doji candle there. So it is finding resistance above the 90 EMA. So obviously we don't know if it's going to continue to the upside or to the downside based off of this weekly close. We have to maybe wait another week or two here. Maybe we can start looking at the daily timeframes or lower timeframes to indicate where that direction might or potentially go to. So to the downside here, obviously is in 21 EMA. You have a major gap to fill there around 400 and change, and then you do have a small gap to fill that it left on earnings. So on Wednesday, you almost filled that gap. That gap gets closed at 484.58. But what was interesting here was that it started to build up on increasing volume here, but ultimately on Thursday it came down here off of a shooting star with increase in volume and closed below the 50 EMA. On Friday, you did form that hammer candle there, but this is off of decrease in volume. You are approaching the HSI midline there, so it's going to either bounce from that and continue to make a higher high, maybe fill that gap and retest the 50, and then reclaim some bullish momentum back here, because for Meta, in order for this to come back up here, in my opinion, you need to break above the 618 here, which is coincidentally now at the 50 SMA, which is at 487.14. You breaking above this level confirms the trend is potentially shifting bullish, which would generate potential higher highs and higher lows. But if this fails here, you might be coming down here for a corrective move back down. So definitely keep a close eye on Meta. Jumping over to Netflix here. So Netflix, no current harmonic pattern being formed on the weekly. Something I just wanted to quickly bring to your attention is the volume started to increase on the weekly here, approaching that HSI midline. So if it finds support above the 90 EMA and it crosses that midline, then you can see maybe I have a target there at $700.99. If we go over to the daily here real quick, I am more looking at the dragon pattern, the bearish dragon pattern, where you completed the type 1 reaction to target 2 of the earnings play there, and now are looking for a potential type 2 return to OPR. So you are finding a bit of resistance here on that 620 range here, because you can see with all these wicks up here, you did go as high as 625.79 on Friday. So if it decides to continue pushing here towards these overbought conditions, I'm looking at 630.65 and then 643.31. You get rejected there, then you might come back down. There's also a setup here for a potential cup and handle there to play out. So I could come back all the way to 591, find support, and then wait for that breakout. Obviously, Netflix has yet to make new all-time highs. New all-time highs is there at $799, $700.99. So I'll be watching here for Netflix, because if the volume is indicative of this potential break above these, where these indecision candles are, or not so much indecisions, but I guess resistance candles here are at these wicks, kind of just chop, then that volume picks up as it is picking up from Friday. You can definitely see this go back up to the 640. So definitely keep a close eye on Netflix. Jumping over to Nvidia here. So Nvidia on the weekly went as high as 958.19 before closing at 924.79. So it is off of decreasing volume here. So that's to be anticipated because of the earnings that's supposed to be coming out on Wednesday. I did mention that Nvidia started to look bullish a few weeks ago, that it had a shot at an attempt to test the high 900s, and it did get close to my target was 970. It still could be the case, in my opinion. You could trade between 970 and 894 up until earnings. Maybe you just chop it up. There's nothing too much to say. There's no harmonics here on the daily or the larger time frames. So in my opinion, if they beat earnings here, you could definitely see this go above 1,000. And if they miss, then we have some targets to fill. To the downside, you have a couple gap fills. You have the 50 SMA and a major gap fill to the downside there. at 681 and even all the way down to 600. I'm not calling out for that yet. It's just a toss up right now whether they report good earnings or not, or bad earnings. You know, anything goes here for Nvidia. It could also just be a nothing burger and they just trade sideways. They don't destroy earnings. They also don't report bad earnings, and you can just consolidate even more. Obviously, only time will tell. We're gonna have to wait till see what Nvidia reports on Wednesday. So definitely keep a close eye on Nvidia, because if they report good earnings, the whole semiconductor space is going to continue pushing higher, which would also push the market even higher. So keep a close eye out on Nvidia. Jumping over to Bitcoin here. So Bitcoin, I am still currently tracking the dragon pattern on the daily. One thing I mentioned in my previous video, that the next target I'd be looking at would be a break above the 50 SMA here, which is denoted by the yellow line. As you can tell, Bitcoin, when it lost it, it has failed to break above it back here in mid-April, and then again back in early May. So you did break above it here on Wednesday, like the whole market just started to continue pushing higher. This was off of increasing volume, which is what you want to see, and then off the retest of the 50 SMA, you want to see it on decreasing volume, which you got, and then you have another attempt here to go even make a higher high, which you got, but the only thing was off of slight decrease in volume. So right now there's still some, in my opinion, bit of indecision candles, as you can see here, whether this is going to hold or not. So support would be at 64K. If you lose that, then you come back down below PT1, and then maybe even create a lower low down to test where the 200 EMA SMA is at, roughly around 52K. If it decides to find support and the volume starts to pick up again, then I'd be looking at 69K, 72, and then 77K. So right now, no clear indecision yet. It's kind of going back and forth with the volume. Volume did start to increase here the last few days here, but it's still relatively low. So maybe it's waiting for the next big move. If we go over to the weekly, we did generate that HSI arrow off of a slight increase in volume. So we'll see here. No clear break yet, in my opinion, just waiting for the next big move here. So definitely keep a close eye on Bitcoin. So having said that, guys, that's all I have. I will be streaming same time as always every week from Monday to Friday, from market open to market close. So if you want to catch me there, I do stream live on Twitch, so link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your Sunday. I will see you guys tomorrow. Take care, everybody, and peace.